Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at Markets Up, we have Charlie Brown. He's the managing director of Nasdaq's Market Intelligence Desk, and we're here to talk about the reaction to the FOMC minutes, or the lack thereof. Charlie, it's great to have you back with me.
Good to be here.
MarketSite, and you know what? It was kind of, I guess, as expected with the minutes.
It was almost much ado about nothing. I mean, there was really, investors were really sort of looking to determine if there was any real concern that the Fed had about the economy. And while the Fed does have concern about the economy, there was no mention about rate hikes or rate cuts there. So there was really no catalyst for investors to climb on the fence one way or the other at that point in time.
All right, and speaking of catalysts, I don't know about you, but I'm actually excited to get into earnings season because I feel like the past 2 weeks, it's been low volume, kind of a lazy market. We're in that vacuum of information right now. What are you looking for going into the end of the week? We have the big banks coming up.
True, the big banks are coming up. That's always a flashpoint. It sort of gives you a driver for the economy. They've been under pressure based on the lack of rate hikes lately. So that's kind of an interesting theme. It's going to tie into the chart because the S&P 500 has been going higher and higher over a period of time. Now we're coming into first quarter earnings. What is that going to do? And is that baked in already? All
right, let's take a look at the chart because as we can see here, it's well above those moving averages. There is a lot of optimism priced into the stocks right now.
There is a lot of optimism. And it's kind of a tale of two cities. As we can see here, back in October when we reached that 2,900 level, before we went into the abyss, when the Fed was perceived to be more hawkish, rate hikes were expected to become fast and furious. All of a sudden, things turned around. The Fed had a dovish turn, and rate hikes were taken off the table. So we streamed right up through the first quarter and into the 2,900 level, just almost touching it right about here, coming down, and then making another move up towards it. That is, at the moment, resistance. But if we can punch through that based on earnings, and earnings are the big wild card at the moment, we'll see if that becomes resistance or it becomes the new near-term support.
I mean, in all the major averages, they're within a % or two of all-time highs. It really is quite incredible considering where we were in December. Now, expectations for Q1 earnings, they're relatively low.
They're muted.
So that could mean a couple of things. I mean, guidance, of course, is going to be key because we're looking to see how much uncertainty is really in the C-suite.
Exactly.
What's going forward. And if they do really well,
it's going to take off. I mean, profits are expected on a year-over-year basis to be 4.2% less. However, people are going to be looking at what the forward-looking statements are going to be. And if they're positive, if you meet and they're positive, things could take off. We could go right through that 2,900 level.
All right, Charlie, thank you so much for joining me today.
You're welcome.
And thank you for joining me for Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.